Everybody, this is John, and welcome to the free video. It's Sunday afternoon, so I don't know where the futures have opened up, but got a couple of things I want to share with you in the free video. So first thing is first is that this decline followed by this rally at this point is bearish, okay, unless and until this current channel can be broken. Okay, so we've established a downtrending channel as we head into the week. So bulls are going to be on the defensive, and this is true for all the markets, and especially the Qs. The Qs haven't even been able to shake off the downtrend that started really back here in November. And you can see this. This is pretty, oops, get that there. Painfully obvious. This downward channel is more so than the S&Ps or anything like that. And let me actually get that. So if we look at this, and I think this is one of the more important charts that's out there right now, but it's just understanding like, wow, you know, hey, the markets, if we look at this weekly chart, we're going to focus, of course, on this uptrend. You know, I mean, obviously, this has been a super strong uptrend for like the last 6 years, right? And so now, that's a worthless trend line. I'll come back and fix that later. But right now, this is the world that we're in. This is the sandbox that we're in. And we're in a very clearly defined downtrend on the daily chart, but we've got a clearly defined uptrend on the weekly chart. How do you handle this? Okay, from a trading perspective, because this year we're all about what? A consistent equity curve, okay? And if you've got a downward channel, then the thing to remember is that you could be sitting on long positions for a long time until this downward channel is broken out. So when I see something like this, my goal, again, going back to consistent equity curve, is going to be this week, assuming we're going to still be under this 104.75 level by Monday or Tuesday, is establishing a more balanced portfolio where, yes, I've got some longs that I like, and I'm going to review our current portfolio in the premium video, but at the same time, wanting to balance it out in case this downtrend continues. Okay? Now, what are some of the things that would make sense? Why would it seem like that this downtrend is going to continue? Well, first of all, the yen here is looking pretty bullish, like at least trying to bottom out. And we all kind of have seen this where when the yen rallies, stocks go down. So right now the yen is actually supporting the at least short-term bearish case in stocks, okay? TLT has kind of done its own thing regardless. I mean, it just kind of goes up regardless. So there's really nothing with bonds that we can say here. If bonds are going higher, bonds have gone higher. When stocks go higher, bonds go higher. When stocks go lower, bonds are just going higher. But that yen is fairly important. And then if we look at XLP, which has been one of the strongest sectors, you can see we had a pretty kind of a nasty reversal here on Friday. This is not quite an island reversal, but you can see the last time we rallied to new highs and puked it up like that, that actually led to a pretty steady decline. And so we've got that potential again. So long story short is as we head into this week, caution is in order. I don't think this is the week where we're just like, oh, sure, you know, it's going to be another uptrend. Let's just buy it and everything will be okay. I think this is something though where we got to really pay close attention to the indexes and some of the key stocks. One of the ones that I'm going to be watching closely is Google. And a lot of times what happens is leading stocks like this actually can lead, not so much lead the markets. I mean, just because Google's going down doesn't mean the rest of the market's going down. It just kind of tells us a little, it kind of glaringly brings out where some distribution is happening and just begs the question, where else is this happening? And that is just something that, again, as we go into this week, I think it's going to be volatile, and I think we have to open up our brains to the idea that things could get pretty nasty on the downside too. As we headed into the end of last week, you know, in terms of a weekly chart, bulls retain the upper hand, okay? And there's no reason to fight this. But on a daily chart, okay, we are in a downward channel that's actually fairly long at this point. And the fact that bulls could not kind of cut that mustard on Friday with such a positive economic report in terms of the employment data is a red flag. All right, now Monday or Tuesday we may bust through here and all will be good. But at this point, especially for me, if we can take out that tree line or the lows from Friday, I think we're going to get a quick decline here. And instead of, if you're 100% long, instead of holding through that pain, doesn't mean you have to cut your positions. Just be prepared to hedge. Okay, be prepared to hedge. And if you're bearish, of course, then that's great. Then we'll look at some opportunities there. So I'm going to review both some bullish and some bearish opportunities in the premium video. You guys have a great trading day, and we'll see you at the next update.